Welcome to Interfund Activities Accounting for GAAP basis governments. I am Olivia Crouch from Team Local Government Support here at the State Auditor's Office. This training is meant to be a beginner's guide to Interfund activities. This particular training is for our GAAP basis governments. If your government reports under the cash basis of accounting, please see the cash basis training instead. We will start the training with some introductory information and definitions. Then we will move into the Interfund activity accounting. As you'll see, Interfund activities are divided into two broad categories, reciprocal or non-reciprocal, and we'll cover the accounting for each type. Finally, after we are familiar with the basics of Interfund transactions, we'll cover a couple special topics related to Interfund activities. Let's get started with the intro and definition section. If you've taken our Introduction to Fund Principles training, you might remember this. As a refresher, funds are a self-balancing set of accounts set up for a specific purpose. Within each fund, the debits must equal the credits. When we talk about interfund activity, we're talking about activity between separate funds within one government. That means each interfund activity affects at least two funds. Because debits must equal credits within each individual fund, that means every interfund transaction will result in at least two separate journal entries. Each fund gets their own journal entry. The technical definition of interfund activity is financial activity between the funds of a government. For example, a city or a county might have a general fund, a utility fund, and a special revenue fund. And if these funds have financial transactions between them, that is called interfund activity. That also means that governments that report a single fund on their financial statements would not have any interfund activity because they only have one fund. Sometimes governments use what we call managerial funds. Managerial funds can be thought of as sub-funds. The government wants to be able to easily track the information for this activity, so it's set up as a fund within their accounting system. Think about a county that has many different departments or functions that are supported by general property taxes, like the auditor's office, the sheriff's office, and the district court. Having these set up as funds in their accounting system makes it easier to pull reports, to get information for each of those departments individually. But could you imagine how huge government financial statements would be if each individual department was reported as a fund? It would be really overwhelming. That's where managerial funds come in. That means the government tracks the departments or activity in a separate fund in their accounting system, but then combines it or rolls it up into one fund for their financial statement reporting. In this example, the auditor's office, sheriff's office, and district court are all rolled into the county's general fund. As you might imagine, sometimes these managerial funds have activity with each other. For example, the district court might pay for some of the sheriff deputies to be at the courthouse. Financial activity between these managerial funds is called intra-fund activity. Intra-fund activity should be eliminated for financial statement reporting. However, that is beyond the scope of this training. Throughout this training, we are only going to be focusing on activity between two separately reported funds of a government, the inter-fund activity. For now, just remember that inter-fund activity and intra-fund activity are treated differently. And this video is all about the inter-fund activity. Now that we know what interfund activity is, let's talk about the categories. Interfund activity is split into reciprocal and non-reciprocal categories. Reciprocal activity includes interfund loans and interfund services provided and used. Non-reciprocal activity refers to interfund transfers and interfund reimbursements. Before we dive into the accounting for each of the 4 types of interfund transactions, let's define reciprocal and non-reciprocal. Reciprocal activity is the exchange of equal or almost equal value between the 2 funds. In this case, one fund is giving something up, but they get something in return, so there's an exchange. Non-reciprocal is the opposite. It's when transactions do not involve the equal exchange between the 2 funds. Let's look at the individual transaction types and their accounting, starting with reciprocal interfund transactions. The 2 types of reciprocal interfund transactions are interfund loans and interfund services provided and used. Let's start with the interfund loans. Interfund loans are when one fund borrows money from another fund. This is considered reciprocal because the lending fund gives up money to the borrowing fund, but they receive something in exchange. The borrowing fund pays them back, including interest. When one fund borrows from another fund, there should be a loan document, such as an ordinance or a resolution. The loan document should lay out all the important terms of the loan, including the amount borrowed, interest rate charged, and the time frame for repayments, and even a repayment schedule. Normally, interfund loan should be for a short period of time. I know that in financial reporting, short term means 1 year or less. But in this context, short term is a little different. It generally means 3 years or less. If you have a loan that is longer than 3 years, your auditor may scrutinize it to make sure it's not a permanent diversion of funds. Basically, that just means they are double checking that it's a loan that the borrowing fund can actually repay. I mentioned that the interest rate should be included in the loan document. That's because interest should be charged in almost all cases. In Washington state, we have a state law that says one fund cannot benefit another. And if one fund lends another fund money without charging interest, the borrowing fund has benefited, while the lending fund lost out on interest revenue they could have earned if they invested that excess cash instead of lending it to the other fund. Now that we know what an interfund loan is, let's look at the accounting. The borrowing fund is the fund that receives cash. To increase cash, we need a debit. The other side of the transaction is a liability called interfund loans payable. Since this fund has borrowed money, they now owe the other fund repayment. That means they need to report a liability. Interfund loan liabilities are reported in all funds, even governmental funds, even if the loan is for more than 1 year. Normally, long-term liabilities are not reported in governmental funds, but interfund loans are an exception, so they do get reported as liabilities in the governmental funds. The lending fund has a decrease in cash when the loan is initiated because that's when they give money to the other fund. To decrease cash, we need a credit. The other side of the journal entry is a receivable. The other fund owes them repayment, so they report an interfund receivable. These interfund loans payable and receivable should be reported on the financial statements separately from other payables and receivables with parties outside of the government. The nature of interfund loans is different from regular transactions with outside parties. So users of the financial statements want to see these transactions separate from other transactions. Now that we've looked at the initial borrowing, let's take a look at repayment. When the borrowing fund makes their repayments, they reduce the interfund loan payable for the amount of principal repaid, so they debit the interfund loan payable. They also record an interest expense for the interest paid. The credit side of the journal entry is to reduce cash for the total of principal plus interest. On the lending fund side, they received cash, so they recorded debit. They reduced the interfund loan receivable for the principal amount of the payment by crediting the receivable. They also record interest revenue for the interest received, which is also a credit. This is what the journal entry would look like for each fund at each repayment date. The accounts that we debit and credit are the same. The only thing that changes are the amounts, which should follow the repayment plan in the original loan document. But what happens if the borrowing fund can't repay or stops repaying the loan? The Governmental Accounting Standards Board, also called GASB, tells us that if repayment is not expected within a reasonable time frame, the loan should be reclassified as a transfer. And that makes sense, because if the borrowing fund is not going to repay the lending fund, then it's a permanent movement of cash from one fund to the other, which is a transfer. Now, what does reasonable time mean? As you might guess, it involves professional judgment. At SAO, we generally expect interfund loans to be 3 years or less. So if your loan is less than 3 years and the borrowing fund is making all the payments from the repayment schedule, then it's safely reported in the interfund loan category. On the other hand, if the borrowing fund misses a payment and there's no plan to get back on track for the repayment schedule, or the borrowing fund doesn't have enough money or revenue sources to maintain the repayment plan, then management should review this to determine if it really is a loan or if it's a permanent transfer of resources. If it's determined that this is actually a transfer, then we are going to reduce the interfund loan payable and receivable balances by the amount that will not be repaid. Maybe this is the entire balance, or maybe it's only part of it. You'll need to look at your own facts and circumstances to determine how much of the loan needs to be reclassified. In the borrowing fund, we debit interfund loan payable to reduce it, and this is offset by a credit to transfer in. In the lending fund, we credit interfund loan receivable to reduce it, and this is offset by a debit to transfer out. Okay, that's it for interfund loans. The next reciprocal interfund transaction are interfund services provided and used. This is where one fund sells goods or services to another fund as part of their normal fund activity. Since this is just normal activity for the fund, it's accounted for as normal revenues in the fund providing the service and normal expenses in the fund receiving the service. You can pretty much treat it the same as you'd treat a transaction with an external party. Here are some examples. First one is the park fund renting a recreational facility to the water department. So the park department has some covered shelters at the local park that are available for rent to the public. Renting out covered shelters is a normal part of the park department operations. The water fund is going to hold their summer staff meeting outdoors at the city park, so they need to reserve a shelter. The water department needs to pay the park department the rental fee. The water fund is going to record that as an expense, and the park fund records the revenue. Another common example is when utility funds provide services to other funds of the government. For example, let's say a city runs a sewer facility, and all of their city-owned buildings are connected to the city's sewer. It's part of the sewer fund's normal operations to provide sewer services. It's the whole reason it exists. So when the sewer fund provides services to the police station, which is part of the general fund, then the general fund needs to pay the sewer fund. The sewer fund will record a revenue, just like when they provide services to citizens. And the general fund will record an expenditure. In governmental accounting, we also have internal service funds. These are funds that are set up specifically to service other funds within the government. Common examples of internal service funds include equipment rentals or mechanic shops, self-insurance, information technology, and more. When these internal service funds provide services to other funds, they record a revenue. And the other funds that receive services record an expense or an expenditure. For interfund services provided and used, the accounting is straightforward. The fund that provided the service will record a revenue when the service is provided, which is a credit. Normally, this credit will be a charge for service type revenue, but in some circumstances, another type of revenue might make more sense. You'll have to pay attention to the facts and circumstances of each transaction to determine the right BARS code. And you can always submit a help desk if you need help choosing the right code. For the debit side of the transaction, if they receive cash right away, they will debit cash. Or if they do not get paid right away, they will record a receivable. Since this is interfund activity, we use a special interfund account called Due from Other Funds. This account is typically used for short-term receivables from other funds. If it is a long-term receivable, it will likely be an interfund loan instead. The fund that received the services debits an expense or expenditure when they received that service. The fund will just use their normal functional expenditure codes, just like if they had purchased the goods or services from an external vendor. The credit side of the journal entry is cash if they paid cash right away. If they did not pay cash when they received the services, then they owe the other fund. That means they will report a payable. And since it's an interfund transaction, we'll use a special payable account called Due to Other Funds. This is used for short-term payables, similar to how you would use accounts payable for transactions with external vendors. We just use a different payable and receivable account here because on the financial statements, these are reported separately from payables and receivables with external parties. That's it for reciprocal transactions. Now let's take a look at the non-reciprocal interfund transactions, transfers and reimbursements. Starting with transfers. This is the transfer or movement of cash from one fund to another. Unlike interfund loan, there is no requirement for repayment. One fund receives cash without providing a service or repaying the other fund. That's why this is a non-reciprocal transaction. The funds are not exchanging equal value. One fund gives something up without receiving a benefit or getting anything in return. Transfers in must always equal transfers out between the funds. If you have a transfer into one fund, that means another fund gave them money and it needs to report as a transfer out. Remember, we are talking about inter-fund transactions. So resources received or paid to another government would never be a transfer in or out. Now a caution about restricted revenues. Restricted revenues must be spent on allowable purposes regardless of which fund the money is transferred into. For example, let's say a government receipts lodging tax into a special revenue fund. Lodging tax is restricted by state law and must be spent on promoting tourism. If the government transfers lodging tax out of the special revenue fund and into the general fund, they still have to make sure that money is spent on promoting tourism. Another example of restricted revenues is in utility funds. The monies collected in utility funds should be spent on utility operations. That means it would be fairly rare for there to be a transfer out of a utility fund. If a government has transfers out of a utility fund, the auditor may scrutinize that transaction to see if it is allowable, or if it should have been reported as an expense instead of a transfer out. The accounting is pretty simple. The fund providing resources to another fund debits transfer out, which is BAR's code 597, and it credits cash. The fund that receives the money debits cash and credits transfers in, which is BAR's code 397. Now on to the last category of interfund transactions, reimbursements. This is when one fund, that we'll call the original fund, pays the bill of another fund that we'll call the responsible fund. The responsible fund then reimburses the original fund. The responsible fund records an expenditure because it was their bill that they should have paid. The original fund, though, does not report a revenue. Instead, they are going to reduce the expense they originally recorded when they paid the bill. We'll look at an example soon. So there's a couple reasons governments end up doing these interfund reimbursements. One reason is that they made an error. One fund accidentally paid the bill of another fund. The other reason is for cost allocation or administrative purposes. Sometimes one fund does work that benefits several other funds. For example, oftentimes the general fund processes payroll for all of the funds, and then later on the cost of processing payroll is allocated to those other funds based on how much work the general fund did. Sometimes when it comes to paying bills to external vendors, it might just be easier to cut one check from one fund and then have the other funds reimburse the original fund. You can think of interfund reimbursements as an accounting mechanism to get the expense or expenditure reported in the correct fund. Let's look at an example. The general fund is our original fund in this example. The general fund pays the phone bill totaling $7,000 on January 15th. Of that $7,000, $3,000 was actually for the sewer fund portion of the bill. That means the sewer fund is the responsible fund for that $3,000. The sewer fund reimburses the general fund later that month. Now, how do we report this? Well, the general fund paid the whole bill of $7,000. But remember, $3,000 of that belongs to the sewer fund. That means we need to reduce the expenditure reported in the general fund. We want the general fund's final expenditure to only be their portion of the bill, which is $4,000. The general fund does not report a revenue because it did not provide a service to the sewer fund. They're just recouping the cost of the sewer fund's portion of the bill. The sewer fund will then report an expense of $3,000, which is their portion of the bill. Now let's take a look at the journal entries for these transactions. Remember I said there's two main reasons for interfund reimbursements. 1, error, and 2, administrative ease. That means we have two different ways to account for this. If it's an error, then the original fund paid the full bill for the other fund and recorded the entire bill as their own expense. The original fund, the general fund in this example, debits expenditure and credits cash or accounts payable for $7,000. When they discover the error, the responsible fund, or the sewer fund in this example, reimburses the general fund. At this point, the sewer fund records its expense and pays back the general fund. When this happens, the general fund needs to record a transaction as well. It receives the cash, so the general fund debits cash, and to reduce the original expenditure recorded, the general fund will credit the original expenditure code. Now each fund has recorded their portion of the expense. Now let's say the government received the phone bill and they knew part of it belonged to the sewer fund at the start. They just paid the whole thing from the general fund for administrative ease. They would know that the full $7,000 phone bill expenditure shouldn't go in the general fund. So what do they do in this case? Only $4,000 is recorded as an expenditure in the general fund because that's the general fund's portion. Total cash paid out is still $7,000, so we credit cash for $7,000. But our journal entry isn't balanced. We need another account to debit. This is where the due from other fund account comes in. The minute the general fund pays the sewer fund's portion of the bill, the general fund is owed money from the sewer fund. That means the general fund records a receivable. Anytime there is a due from other fund, we also need to record an equal due to other fund. In this case, that's the sewer fund. So our sewer fund will report their share of the expense and a liability due to other fund. When the sewer fund reimburses the general fund records cash and reduces the due from other fund receivable. The sewer fund also reduces the due to other fund payable. That's it for our overview of interfund transactions. Now that we've covered the basics, we're going to talk about a few special topics. First up is utility taxes. These are taxes authorized by state law where a city imposes a business and occupation tax on their utility funds. Sometimes we see governments report payment of utility tax as transfers between the general fund and utility funds, but that's incorrect. The taxes are a tax revenue of the general fund and an expense of the utility fund. Let's look at the journal entries for this transaction. The general fund is going to report a tax revenue using BARS code 31640. The utility fund will record a functional expense using the BARS code for utility expenses. Notice that neither fund reports a transfer. Remember, earlier I said it would be rare for a proprietary fund to report a transfer out. Sometimes we see governments mistakenly report a transfer out instead of a utility tax expense. A hint for all governments watching: if you have proprietary funds, go look at whether you're reporting transfers out of those proprietary funds. If you are, I recommend investigating those transactions to determine whether it should actually be reported as an expense. If you need help or have questions, please submit a help desk. We'd be happy to discuss your government situation with you. The next topic is interfund reimbursement versus interfund services provided and used. We see a lot of confusion on this topic, so we're going to spend some time looking at the difference between these two and how to determine if your interfund transaction is a reimbursement or a service. One thing that these have in common is that both an interfund service and an interfund reimbursement result in the responsible fund reporting an expense. That means the difference is really in the original fund. Remember, in an interfund reimbursement, the original fund is going to reduce their expenses reported. On the other hand, an interfund service will result in a revenue being reported in the fund providing a service. It's important to correctly classify transactions as reimbursement or services so that the original fund reporting is correct. I think the easiest way to talk about the difference is to look at a couple of examples. Example 1. The city sets up an internal service fund to account for their IT services. The fund will purchase and manage new IT equipment like laptops, monitors, TVs, etc. This fund will also pay for the IT employees' salaries and wages and other IT-related costs. The IT costs are then divided amongst the various funds and departments. Should this be accounted for as an interfund service provided and used, or is this an interfund reimbursement? This is an interfund service. The internal service fund was set up specifically to sell IT services to the other funds and departments. The IT internal service fund should report a revenue for services provided to other funds and departments. The other funds and departments will then report an expense or expenditure. Whenever an internal service fund is set up, the purpose is to provide services to other funds and departments. That means most of the time, their transactions with other funds will be an inter-fund service. We would only expect to see an internal service fund reducing their expense in an inter-fund reimbursement if there was an error. Example 2. The general fund employees process payroll and accounts payable for the entire county. The cost of the general fund employees' salaries is then divided amongst the various funds and departments. Is this an interfund service or an interfund reimbursement? This time, this is an interfund reimbursement. The general fund isn't really providing a service to the other funds. It's just administratively easier to process everything in one department. So this is just cost allocation. The cost of processing payroll and accounts payable should be reported in the funds and departments that benefit from it. So those funds and departments need to report the expenditure. However, this is not a revenue to the general fund. The general fund should reduce their original expenditures reported related to processing payroll and accounts payable. You might be asking why these two scenarios are different. Why does the internal service fund get to report a revenue when the general fund does not? The answer is that cost allocation does not qualify as interfund services. It is not a programmatic activity. It's just moving the expenses from the original fund to the responsible fund. The general fund is not in the business of selling services or supplies. It is uncommon for the general fund to report a revenue when interacting with other funds. The majority of the time, the activity will fall into one of the other three interfund transaction types. If your general fund is reporting revenue from other funds, I recommend reviewing those transactions to determine if they really are an interfund service provided. You can submit a help desk if you are unsure whether your activity should be an interfund service or another type of interfund transaction. On the other hand, the internal service fund was set up specifically to sell goods and services to the other funds. This is a programmatic activity for the internal service fund. That's why the internal service fund will report a revenue when the general fund would not. That concludes our review of interfund activities. Everything we discussed in this video can be found in the BARS manual. BARS section 3.9.8 is our interfund activities overview page that reviews the 4 interfund activity types. We also have additional pages for interfund loans and other interfund activities that may be helpful to you. Another great resource is the GASB codification, which is a free resource provided by GASB. For more information on interfund activities, navigate to section 1800, Classification and Terminology. I hope you feel more familiar with interfund activities. If you have any questions, I encourage you to submit a help desk. Thank you.